Write an e-commerce business plan, step-by-step guide. What is an e-commerce business plan? An e-commerce business plan is a document that outlines your business and its goals, analyzes your industry and competitors, and identifies the resources needed to execute your plan. It also lists the e-commerce retailers you'll use to distribute your products and the marketing strategies you'll use to drive sales. Here's a helpful guide to starting an e-commerce business. Whether a company operates as a startup or has years of operations and growth under its belt, an e-commerce business plan is essential for evaluating a business and determining areas of improvement. An e-commerce business plan is vital for increasing numbers of shoppers conducting business online. It's estimated that the number of e-commerce users in the US alone will grow to 333.5 million by 2029. An e-commerce business plan keeps you organized and is useful when seeking investors who need to understand your company. Components of an e-commerce business plan. While the different sections of an e-commerce business plan are tailored to the needs of a particular organization, below are some standard components. Cover page. Keep the cover page simple and professional. A cover page should typically include the following: company name, logo, contact information of the founder, company address, one-line description of the company, executive summary. An executive summary, like the name suggests, is a summary of what the e-commerce business plan will cover. Later in the article, I discuss what an executive summary should include in more detail. Company summary and opportunity. This section generally contains a company synopsis, a short description of the products and services, a brief history of the business, the mission statement, and the team and management structure. It should also cover the challenges the business solves and how it aims to do so. Target market and audience. In this section, describe the state of the current industry, major trends, and key competitor details. Additionally, talk about what your target customers and buyer personas look like, along with demographics, psychographics, and pain points, and also why they'd be interested in your product or service. Product and services. This section should detail the products and service lines along with the pricing strategy to be used. Marketing and sales plan. Marketing and sales are vital to a business success, so it's essential to list the methods to be employed. The image below includes the key aspects to include in this section. I also elaborate more on what a marketing plan and sales plan should cover later in this piece. Financial plan. This section covers monetary details. Topics to cover include costs, revenue streams, projected revenue, and funding requirements and sources. Goal planning. This section notes down goals and milestones to be achieved, particularly in the first year. What will success look like? That's the question to be answered here. It's even better if certain goals can be data, number, or metric-based. How to write an e-commerce business plan. 1. Give an executive summary. An executive summary is a 1 to 2 page overview of your business. The purpose of an executive summary is to let stakeholders know what the business plan will contain. It's important to provide an executive summary. This allows investors or executives who don't have the time to read your full plan to quickly see the most important highlights. 2. List and describe your business. This is the section that needs the most detail because it highlights what you're selling. To begin, I'd provide an overview of your product or service. For instance, a photography company would probably list their photo packages arranged by price and services. 3. Detail your products and services. Once I have described my business and its purpose, I'm ready to dive deeper into the plan. What products and services do I or will I offer? This is an opportunity to list each item and its purpose, allowing me to answer the question, why? In other words, why am I choosing to offer these specific products and services? After detailing my products and services, I'd outline the pricing model. What is the cost associated with each service? What will the profit margin look like? Determining price, especially as a startup, can be challenging. However, sales pricing calculators can help determine the best pricing strategy. Driving and enhance e-commerce forward with Odoo 17i powered. AI-powered e-commerce elevating customer experiences, optimizing operations, a comprehensive guide by an e-commerce expert. Remember when the first businesses that mastered SEO dominated e-commerce? Early adopters of AI have a unique opportunity to achieve an even bigger impact by applying artificial intelligence in their e-commerce operations and stores. Leaving behind the media buzz. You need to understand the principles behind AI and the opportunities it offers in e-commerce to make informed decisions and leverage these technologies for strategic advantage. The e-commerce industry has reached a critical point in its development. The general availability of powerful artificial intelligence tools will profoundly affect all aspects of e-commerce operations and enhance, change, and, in some cases, reinvent the customer experience. Mastering AI for e-commerce success. Leaving behind the media buzz. Understand the opportunities AI offers in e-commerce to develop your strategy and roadmap to leverage these technologies for strategic advantage. Harness AI advantage. By driving and enhance e-commerce forward with Odoo 17i powered course. Driving and enhance e-commerce forward with Odoo 17i powered course is the ultimate resource for professionals who want to understand and utilize AI's transformative potential. It is the blueprint for understanding and applying AI, giving your business just the edge you've been waiting for. The course aims to guide your exploration of the strategic implications of artificial intelligence for an online business. It's not a technical manual or a list of by-step instructions. Look at it as a toolkit designed to aid you, e-commerce professionals and entrepreneurs, extract the best from what AI offers to enhance and revolutionize your business. The learners get a detailed analysis of e-commerce use cases for leveraging AI. Recommendations on developing an AI vision and strategy for their business. And selecting the best technology to implement it. Drawn on years of experience leading product development at 3 major e-commerce platforms and closing the e-commerce skills gap with his innovative training programs. Michael Vax shows you how to embrace AI and boost bottom line and top line performance. Artificial intelligence is a critical technology for e-commerce companies seeking to remain competitive in today's environment. The benefits of applying AI are far-reaching, from operations and customer service to marketing. These benefits include improved efficiency of back-end operations and staff satisfaction, better decision-making, and a remarkable customer experience. The possibilities are limitless, and so are the rewards. Introduction to era of AI in e-commerce. In today's digital landscape, AI has become an indispensable tool for online merchants and retailers seeking to drive growth, maintain market differentiation, and meet evolving customer expectations. We will unravel the complexities and organize our journey through the applications of AI in the e-commerce realm. E-commerce data preparation with AI. Create and enhance product content. Customized product content for different sales channels. Attribute enrichment. AI image generation and optimization. Product matching and deduplication. Control data quality. Automate localization. Automatic merchandising. Creating truly personalized product information. Innovative software tools. Examples and idea. AI and marketing. Brand content generation. Customer personas. Customer segmentation. Hyper-personalized ads. Keywords harvesting. How do you become a good brand for humans to find in the age of AI? Innovative software tools. Examples and ideas. AI and optimizing post-sale experience. Empower sales and support with AI chatbots. Conversational commerce. Optimize order fulfillment. Optimize gathering of customer feedback. Virtual agents for order management. Tackle fake reviews. Innovative software tools. Examples and ideas. Do not forget get an ebook with a 90% discount low offer link in the welcome message. The e-commerce marketing operating system. 4. Conduct a market analysis. For the market analysis, I'd provide the operational climate of the industry I'm in. 2. Illis. 5. Strategize your marketing plan. Having the right marketing plan for your e-commerce business is crucial for any business. It serves as a roadmap for how your company will build brand awareness, reach your target audience, and boost sales and revenue. As seen in this template, your marketing plan will focus on positioning strategy, acquisition channels, and tools and technology. I'll take a look at each one. Positioning strategy. This fixates on how you will position yourself to your audience. How will you address their challenges and goals? How will you use the tools at your disposal to accomplish this? Acquisition channels. The marketing plan will also require you to focus on where your customers come from. Are they finding your business through search engine marketing? Do they discover your business from your blog or social media accounts? Identifying your acquisition channels allows you to identify which ones to prioritize. Tools and technology. Lastly, your marketing plan should lay out the tools and technology your marketing team will need and use. Will you use a content management system, CMS? 6. Create a sales plan. When creating a sales plan, I'd describe the methodology, organization structure, sales channels, and technology. For example, when discussing methodology, will I focus on an inbound strategy where I attract customers to my business through my content, or an outbound strategy where I initiate contact with my prospects? And what's the reason behind this decision? This part of the e-commerce business plan will also require me to outline the people in charge of selling my products and services, as well as what channels they'll use to sell the products. Similar to creating the marketing plan, the sales plan will also require a brief on what tools I plan to use. 7. Outline legal notes and financial considerations. In the following 2 sections of your business plan, I'd describe the legal and financial structures. For example, the photography company should provide details on the legal considerations like online safety rules, e-commerce regulations, and the company's costs. Legality and finances are crucial information for investors and stakeholders. In this section, it's important to be honest and thorough to give partners a realistic idea of how to contribute. E-commerce business plan tips. Before you lay out the business plan and set the tone for your e-commerce business, there are some factors that are essential to consider. These factors lay the foundation of your business and will help you construct the document with ease. I've noted down some of the most crucial business plan tips and tricks. Find the purpose of your plan. There is not merely one purpose behind writing the business plan. Different business plans serve different purposes for e-commerce owners. There are 3 main purposes of a business plan. Gain secured financial support. E-commerce businesses are in dire need of investors, and hence, their business plan with all the objectives, competitor analysis, frameworks, and supporting documents use this to gain financial support, to set the direction for your teams. Businesses include metrics like target market, pricing comparison, working process, objectives, and other nitty-gritty in their plans to help their teams align and achieve the desired results. Attract relevant customers. With the current markets and trends in a well-laid business plan, it becomes easier to determine the segment of your target audience. Artificial intelligence in e-commerce. How this rapidly evolving tech will change the online storefront. E-commerce. Odoo 18 easily connects with other company modules and provides a complete e-commerce management solution. Odoo 18 gives companies an all-in-one platform for effectively managing their online sales operations with capabilities including order processing, product catalog management, and website construction. A new menu called Shop will appear on the page when the e-commerce module has been installed. From there, customers can easily buy products. Users can improve the functionality and user-friendliness of the page with the Odoo 18 website builder. Customers can also utilize the rating option, which is user-friendly and enables the installation of certain themes. As shown below, to contribute ratings to our page, there are different blocks, such as intro, column, content, image, people, text, contact and form, social debug, product, event, and blogs. As in the below screenshot, the user can alter any element of the product on several pages with Odoo 18. When we choose a product on the store page and choose the edit option, for instance, we are shown a variety of characteristics unique to product pages, such as layout, which contains a grid and options list, size, style, and a top bar, among many other features. A special area for product customization is also available, with choices for badges, photos, reordering, and size. As seen below, the user can also include buttons like Add to Cart, Wish List, and Compare to make it simpler for customers to access. Furthermore, the customer can upload additional photographs from the product's customization page. As shown below, customers may more easily ascertain if a product is tax included or excluded with Odoo 18's tax indicator functionality. The customer can additionally add many photographs to the product by selecting the Extra Images option on the product form that is situated beneath the sales page. All of these photos are accessible to the buyer via the website. As shown below, the image size will appear in the respective tab. The width field allows for formatting, picture width, and the conversion of the format to a web image, which will result in a compressed size. The quality of the image can be updated or altered. Similarly, the various parameters can be updated, like background image, visibility, animation, image formats, etc. Under the column section, you have the background, border, round corner, shadow, visibility, and animation. Under the image section, you have the media and reorder option, which can be used to replace or remove the image accordingly. Accessible to the buyer via the website. As shown below, customization is possible at different stages of the purchasing process. Users can quickly add a new product to the e-commerce website from the front end as well. To add a new product, click the New button, as in the image below. From the list of available options, which includes, among other things, pages, forums, and blogs, pick the product option. You can enter the product details in the new pop-up window that appears as a result. There, include the product name, customer tax, and sales price. After that, put the thing away. After that, users can alter this section to add more blocks and further personalize the website. Users can add a picture of the product by selecting the main image option. Within the Customize section, there is an Extra Images option. You can submit several photographs of the product on the website by using the Add button. Other adjustments, including customer sharing and rating, can then be enabled. A new rating star can appear beneath the product name if the customer rating is enabled. Social media platforms like Facebook and Twitter are displayed next to the sharing terms and conditions in customer share choices. Personalization also enables the view of comparison choices, buy, wish list, and product variants. Details like the specifications, image width, layout, zoom, and thumbnails can then be supplied. After you've completed all the required changes, click Save. The product will thereafter be available on the website. Additionally, customization makes it possible to view product variations, buy options, wish lists, and comparison options. Then, you can provide information about the image width, layout, zoom, thumbnails, and specifications. Advances in technology and e-commerce. From digital transformation and software as a service to virtual reality and artificial intelligence, technology keeps pushing the limits of what e-commerce can do. With compounding advancements in technology, there's something new competing for online retailers' attention every day. You'll never find yourself at a loss for something new and different to try. The real task is identifying the best opportunities for your e-commerce business. 15 key AI use cases in e-commerce. How do you use AI in e-commerce? Research shows that AI can boost customer satisfaction, revenue, and cost savings by up to 25%. But knowing where to start can be challenging because the technology is evolving rapidly. Here are the most impactful AI use cases in e-commerce. 1. Hyper-personalized product recommendations. Personalization is a key driver of customer engagement and loyalty, as a full 81% of shoppers favor brands that tailor their experience. AI-driven recommendation systems use machine learning, ML, and predictive analytics to track behavior, analyze preferences, and tailor shopping experiences to shoppers. Meanwhile, generative chatbots use NLP to recommend products to shoppers based on the business data they've been pre-trained on. AI agents go a step further, tailoring the individual CX based on past and present data to deliver hyper-personalized recommendations. For example, a website shopping assistant agent can recommend products based on purchase history and preference, but also the current context of the conversation, user behavior, and even prior interactions stored in memory, providing a more accurate, relevant recommendation that increases the likelihood of conversion. 2. Proactively curb cart abandonment. Cart abandonment is the scourge of online retailers, but AI agents for e-commerce can help. Combining context awareness with goal-oriented behavior, AI agents can proactively trigger personalized offers at checkout to reduce cart abandonment. For example, an AI agent can perceive when a shopper has stalled on the checkout page, then proactively trigger a coupon for free shipping or a discount in the split second before they bounce to help to close the sale. 3. Automated customer service with AI agents. Chatbots are a widely adopted form of AI in e-commerce, able to handle around 70% of customer interactions on their own. That said, AI agents are the next generation of shopping assistants, offering a more seamless support experience without the usual friction. Like chatbots, AI agents use NLP to understand and respond to customer inquiries in a conversational way with accurate, relevant responses. Available 24/7 on websites and support channels, agents can provide immediate support, answer FAQs about shipping and returns, recommend products, even execute tasks like transaction processing. Unlike chatbots, AI agents can remember past interactions with customers. This enables them to hold a single continuous conversation with customers that spans channels, eliminating the friction of playing catch-up with returning customers. By maintaining context between interactions, AI agents enable a more convenient, efficient service experience that elevates customer satisfaction and loyalty, while freeing human agents for more complex tasks. 4. Dynamic pricing optimization. AI helps retailers to maximize profits by optimizing prices to current market conditions. Using ML algorithms, AI-driven pricing tools analyze internal and external factors like product availability, demand history, production cost, and average online price to dynamically set prices for optimal profitability. For example, Amazon uses AI-powered dynamic pricing tools to optimize prices as often as every 10 minutes, helping the retail giant to increase profits by 143% annually on average. In effect, if demand for a certain product spikes, AI bumps up the listed price automatically. Or when a competitor slashes prices, AI drops the price on your site to match. With an AI-driven pricing optimization strategy, retailers can improve inventory management, optimize personalization, and maximize revenue in the face of ever-changing market conditions. 5. Conversational commerce with AI. Voice-assisted shopping. Voice-assisted shopping and search are gaining traction among shoppers, with 22% of people saying they prefer voice-enabled AI assistants like Alexa or Google Assistant to typing. By integrating NLP and voice recognition technology into websites and support channels, retailers can offer a more convenient experience that drives sales among the millions of consumers who already use voice-enabled AI to shop and discover new products. AI agents are perfect for voice-assisted shopping and search. They can guide customers through the shopping process from start to finish with a live conversation, seamlessly shifting from comparing prices to processing transactions to handling returns or exchanges. And since AI agents for e-commerce are omni-channel, if the customer switches channels, all previous shopping activity is preserved, helping to increase sales, operational efficiency, and CX in ways general AI chatbots can't. 6. Smarter search capabilities. AI enhances the search capabilities of websites and mobile apps, making it faster and easier for shoppers to find the products they want. Retailers can integrate the following AI technologies to supercharge their product discovery process. Natural language processing, NLP, enables site search engines to understand the meaning and intent behind a user's search query in any language to deliver the most relevant results, even if the search query contains variations like typos, synonyms, or slang. AI-assisted visual search enable customers to search for products by uploading an image instead of typing. Employs AI algorithms and image recognition tech to suggest items similar to what's pictured, improving discovery among customers that don't know the product name. Context-based search uses AI algorithms to scan external data like trending products, seasonality, and day of the week to make more relevant search results. Can also autofill search phrases and suggest related products to increase the likelihood of a purchase. 7. Improved customer segmentation and marketing. Audience segmentation is essential to effective personalized marketing, and AI in e-commerce can help. Using ML, AI-driven tools for customer segmentation analyze user data and identify patterns across datasets. Then create accurate customer segments based on shared characteristics, even discovering entirely new segments and characteristics that may have been overlooked. This enables retailers to tailor marketing strategies and target campaigns with surgical precision. ultimately reaching, engaging, and converting audiences more effectively. In fact, well-segmented marketing campaigns have been shown to drive a potential 760% increase in revenue. 8. Intuitive upselling and cross-selling. AI can anticipate which products will appeal to customers and recommend these items in opportune moments to drive upsells and cross-sells. Combining ML algorithms with predictive analytics. AI-driven recommendation systems analyze past purchases, preferences, and browsing behavior to tailor experiences across websites, chatbots, shopping assistants, and mobile apps to the tastes of individual customers. Dynamic website content is an example of this AI use case in e-commerce, such as the "you might also like" sections on websites or the frequently bought together product bundles on checkout pages. In fact, 63% of consumers say AI-powered product recommendations are highly influential on their purchases. 9. Auto-generated content. With generative AI for e-commerce, retailers can automatically create highly tailored content that drives greater engagement and sales, but at a fraction of the time and cost. Based on the customer profile and current behavior, Gen AI tools can create a variety of content tailored to specific experiences and audience segments, such as product descriptions, marketing content, dynamic website content, personalized product recommendations. 10. Fraud detection and prevention. Protecting retailers against fraudsters in real time is another key AI use case in e-commerce. AI-powered fraud detection tools use advanced ML algorithms to analyze transactions, behavioral data, IP addresses, credit card information, and more to detect complex patterns and irregularities that suggest fraudulent activity. Going a step further, AI agents can take action to halt fraudulent transactions in the moment. For example, a vertical AI agent for fraud prevention on a website can require additional verification from suspicious buyers before authorizing a purchase, while flagging the high-risk transaction for the fraud team. 11. Fake review detection. Customer reviews are key to building trust and driving sales, as 93% of online shoppers read reviews before making a purchase. However, research shows that around 30% of online reviews are fake. What are the key components of a consulting business plan? Ever tried to put up a tent blindfolded? Navigating the consulting world without a business plan can feel the same overcomplicated. We created this guide to help you set a strategic, actionable plan on how to operate your early-stage consulting business. We'll help you define your services, set achievable and clear goals, and arrange strategies for growth. So are you ready to pitch your tent with both eyes open? Key takeaways. A consulting business plan starts with defining your unique selling proposition, USP. Identify a niche and ideal client by conducting thorough market research and competitive analysis. Develop a 12-month marketing strategy with specific targets. Allocate 10 to 15% of projected revenue to marketing for optimal results. Realistically estimate your expenses and revenue based on billable hours, fees, and retention rate assumptions. Use a proven template rather than starting from scratch to not overlook important elements of the plan. What is a consulting business plan? A business plan is a document covering all the aspects of your future consulting business in terms of achieving business goals. In other words, this specific plan removes the guesswork from how one runs their consulting business. In the upcoming sections, we'll explain the key pieces needed to create your business plan. Your consulting business plan should offer a detailed overview of your consulting firm. Let's briefly review the essential sections of the plan and what should be in each of them. Executive summary is a short overview of the main points of the document. Business overview highlights the mission, vision, history, and services offered by the consulting firm. Management team provides bios and expertise of key team members. Customer analysis defines target clients, their needs, and how the consulting service solves their problems. Industry analysis evaluates the landscape including growth, trends, regulations, and competition. Competitive analysis compares the consulting firm's positioning and offerings versus competitors. Marketing plan outlines promotional strategies, lead generation, and metrics. Operations plan details the logistics of service delivery. staffing, resources, and customer service principles, financial plan projects costs, revenue, cash flow, and profitability timelines. Key steps for developing your consulting business plan. Building a thriving consulting business requires thorough planning and a keen eye for detail. Let's walk through this journey step by step. Step 1. Identify your niche and ideal clients. Kick off your business plan by diving deep into industry research. Look for sectors and trends where there's a gap that your expertise can fill. To validate the demand, consider surveying potential clients. Once you've got a handle on that, create a detailed profile of your ideal client, considering factors like their company size, revenue streams, challenges, and objectives. By the way, focusing on ideal buying personas in B2B, with all these fictitious names, bios, etc., is one of the greatest sales mistakes, according to Corporate Vision's findings and Gartner B2B sales research results. Step 2. Analyze the competition. Understanding your competition is crucial. Examine competitor services offered, how they are marketed, and what they charge. This is your chance to find your unique selling proposition. Step 3. Set your rates and service packages. Implementing a new accounting system, 8-step guide. How to implement a new accounting system in 8 steps. Your migration checklist and guide. Switching accounting software can make a huge difference to the way your business works. Up-to-date systems can speed up your finance processes and increase efficiency. A new accounting system can also deliver benefits. Are you wondering how financial professionals can predict cash flows? Prepared for the move. Have complete buy-in from the business, and all the right tools and expertise to hand to support a seamless transition. As you follow the 8 tips below, you can use the accounting system implementation checklist to tick off as you go along. 1. Build a strong business case for implementing a new accounting system. Before you even start with your project, you are probably going to have to make the case for spending time and money implementing a new accounting system. Your company may have a pro forma that you need to complete. Or in smaller businesses, you may just need to make your case to the board or the CEO. Hints for what to include in your business case for a new accounting system. You can do more with less. More efficient accounting software means that you can either reduce your headcount or won't need to recruit as quickly when the business grows. You can give your customers, internal and external, better service. Better accounting software means better information and better data analysis capabilities. You can provide better insight into the business, insight rather than numbers. You'll have more time to become a finance partner to the business. 2. Be prepared to communicate updates throughout the accounting system implementation. The key to a successful project and to having new accounting software positively adopted is to have great communication. Rumors can be terrible things, and if someone gets wind of a change that is happening, then you may find that all sorts of different stories do the rounds. Start by identifying your key stakeholders, which could include finance users, wider business users, suppliers, customers, directors and senior managers. All the way through, the aim is to make sure your stakeholders fully understand what is going on and how it will affect them. Make sure that you have a good communications plan with regular updates and pay attention to your important stakeholders. Also, have a way that people can provide feedback. 3. Chunk up the accounting system implementation project. Don't be tempted to try and do everything all at the same time, because that is a recipe for disaster. Instead, break your project up into manageable chunks and deal with each in turn. That way you and your team won't get dispirited before you even start. Split your project down into large blocks to start with. Then fill in smaller blocks within the larger ones. Consider the wider business picture. What things do you need to put into the quick wins box, and what things can be done later? Make sure also that you talk to the business about the vision for the future. It can be useful to use a spreadsheet to manage your chunking up, or commercial planning tools like Odoo can help. 4. Do a data cleanse before the accounting system implementation. Clean data is good data, so make sure that you are only importing data that is accurate. This means that you may need to take time to go through things like your balance sheet accounts and get rid of odd balances that have been there since the dawn of time. A good example here would be to only bring across customers who have bought in, say, the last 2 years rather than every record of every customer who has ever bought from you. So before you carry out any data migration, you need to do a full data cleanse. Again, remember to chunk it up and start with something easy like your supplier list. Accounting and auditing with artificial intelligence. Odoo 17. AI, artificial intelligence, improve workflow, efficiency, and accuracy by bringing AI to your accounting systems. AI in accounting and auditing, blazing new trails in financial management. Is your accounting team still spending hours on tedious data entry tasks? Are you wondering how financial professionals can predict cash flows, detect fraud, and ensure regulatory compliance in real time? In a world where numbers rule, the accounting and auditing industry is experiencing an innovative transformation powered by artificial intelligence, AI. This course is designed to build your understanding of the emerging field of AI. And help you consider the broader application of it through our work as professional accountants. The term AI, artificial intelligence, seems to be part of every product or service description today. This course will define AI and its impact on accounting and workflow in today's modern office. Throughout the course, you will learn what tools are available today to dramatically improve workflow, efficiency, and accuracy by bringing AI to your accounting systems. Artificial intelligence, AI, is no longer just a theoretical concept. Instead, AI is a practical tool available today to help you address and solve real-world problems. In this course, you will learn about the fundamentals of AI and how you can put this amazing technology to work today to help you and your team work more efficiently and effectively. Participate in this course to learn about the fundamentals of AI and specific types of problems AI can help you address. You will learn about AI features available in everyday applications, including Excel, and how you can use these features in situations such as detecting fraud and identifying potential errors in transactions. You will also learn how AI is changing how accounting and financial professionals work, both today and in the future. The AI for Accountants digital short course has been created specifically for IPA members to enable you to first learn the basic concepts of artificial intelligence and secondly use your knowledge and understanding to apply in your practice through real-world examples and interactive discussions. Upon completing this course, you should be able to the role of AI in accounting, advancements and opportunities. Identify key components of artificial intelligence. Differentiate between artificial intelligence, machine learning, and robotic process automation. List examples of potential uses of artificial intelligence in accounting and financial environments. Identify instances of AI features in applications such as Excel. Automate in finance and accounts, automation in finance function. Document capture and recognition for financial workflows. Frictionless customer onboarding. Robotic process automation plus intelligence, AI that automates business processes. Internet of Things, AI that enables devices to communicate directly without human intervention. Start and grow your own consulting business from zero. Artificial intelligence in accounting practical applications. Odoo 17. 5. Implement what you need, not what you already have. Don't be tempted to try and simply replicate how your current systems and processes work because you may just be trying to build in inefficiency. Instead, have a fundamental review and ask yourself why you are doing things in a particular way. If it doesn't make sense, then bin it. Discuss your finance challenges with your potential software suppliers and see how their solution can help empower your finance team. 6. Test everything with the best will in the world. No software developer can possibly hope to get a new accounting system that will work for every company in every sector right out of the box. So make sure you set aside time for proper testing. This is also helpful because it gives you a chance to use the system. Get used to it and see if there is any functionality that can help you do things better. Your testing may be split down into beta and user acceptance testing, UAT, phases. Beta testing will be done by the project team and will check basic functionality following configuration. UAT testing is the gold standard for your organization. This is designed to make sure that ordinary users can work the system, find the functionality that they need, and that the system is delivering the results that they expect. This is also where you are checking that data is imported correctly and workflows, etc. Act as you expect. 7. Train your people on the new accounting system. Setting up a new accounting system would not be possible without training to help your teams get up to speed on the software. A good training program will help people to understand how to do their roles, find features in the system that they may need, and introduce new functionality that their old system may not have had. 8. Continue to modernize and improve your accounting systems. Once your system is in place and you are happy with it, then it is tempting to let sleeping dogs lie, but this is a big mistake. There is so much more than modern accounting systems can do that you really need to make sure you push your new software to add even more value. An accounting system is how businesses organize and track their financial information. It can be used to create reports about that data. A sound accounting system can save you hours of administration nightmares. Why your small business needs an accounting system. Every business benefits from establishing an accounting system. Having an accurate and full record of financial transactions for your business will help you to understand how your business is performing. Your accounting system keeps your business financial transactions organized. This will allow you to see the financial health of your small business more easily and then do strategic planning for the future. Being able to generate financial statements is important for communication with various stakeholders. When applying for small business loans or obtaining lines of credit, you often need these documents to show your financial status. If your business is ever audited by the IRS, having a complete and systemic accounting system is helpful to generate the records you need. What is a general ledger? In a double-entry accounting system, the general ledger is the primary record in a business's accounting system, and it is helpful for small businesses to establish early on in the life of a business. Although your ledger may not be a traditional paper book ledger, the operations are the same, whether electronic or paper-based. A general ledger has 4 elements. Chart of accounts. This is a list of all the accounts you use to record your financial transactions. You use it to organize your transactions and provide an overview of your business's operations. It is made up of 5 main account types and various accounts within those types. The specific accounts will depend on the type of business. Financial transactions. These are exchanges between a buyer and seller related to the transfer of goods or services. This can also include lenders who have loaned your business money. Accounting balances. This is a running total after transactions are recorded. Accounting periods. This is the time frame used for your business financial reporting. These can vary but are often a year, quarterly or monthly. Features of a chart of accounts. As the map of your accounting system, your chart of accounts can be tailored to the needs of your business. It is best to speak with an accounting professional to ensure you establish a system that matches your business needs. 5 primary account types. The chart of accounts is divided into 5 account types. Back when books were kept on paper, each of these types generally had its own ledger, and this was where all financial transactions were recorded using a double-entry system. While most people now use financial software or a spreadsheet instead of a physical, handwritten ledger, the organization of the financial data can be done in a similar way. Asset accounts. This is where you record items that your business owns. For example, property, plants, and vehicles. Liability accounts. This is where the debts of your business are recorded. For example, loans, accounts payable and taxes owed. Revenue accounts. This is where you record any income earned by your business. For example, sales and interest from investments. Equity accounts. This is where you keep track of investments into the business. Dividends or distributions from the business. And cumulative earnings or losses. Expense accounts. This is where you record costs for your business to operate. For example, utilities, cost of goods sold and salaries. General ledger sub-accounts. Back when people kept their books with pen and paper, they would have a main account with separate sub-ledgers, such as accounts receivable or inventory. This allowed financial reporting to be broken down further. These days, you can do a similar system when doing computerized accounting. You can tailor these accounts to your needs. If set up well, they can provide you with an overview of your business so that you can identify every area of your business that earns or spends money. Some common accounts include asset accounts, petty cash, checking, savings, accounts receivable, and inventory, liability accounts, sales tax, accounts payable, payroll tax liabilities, revenue accounts, sales of goods, services revenue, equity accounts, owner's equity, retained earnings, stock, expense accounts, cost of goods sold, rent, insurance, supplies, equipment, details included on a general ledger. Although your accountant or accounting software keeps your books, it is important to know what information is in your general ledger. This can help you better understand your financial reports and the information contained in them. If you are starting out and establishing your own general ledger, create a template to standardize your ledger and accounting system. Account name, the name of the account. Account number. Not all accounting systems use account numbers, but when they are used, each account is assigned a unique number to assist with locating and identifying accounts. Date. The date allows you to find transactions and track them more easily and is required for tax and most reporting purposes. Opening balance. The starting balance for the account. Some accounts start at $0, and some will carry over from a previous financial period. Customer, vendor. Name of the customer or vendor for the transaction. Description. This column provides space for the details about each transaction. Debit and credit columns. Debits will increase your assets and expenses and decrease your liabilities. Revenue and equity accounts. Credits will decrease your assets and business expenses and increase your liabilities. Revenue and equity accounts. Closing balance. The closing balance for an account at the end of the financial period. Steps for developing your accounting system. Even if you use an accountant or accounting software to set up your system, you still have important decisions to make. You should be involved in the decision-making process, as it is essential to understand how your accounting system works, as this is where all of your financial documents will come from to aid your future financial planning and discussions with key stakeholders. 1. Create a bank account. Setting up a business bank account is important for small businesses. You need clear separation from your personal bank account. Having a business bank account will help you organize your finances and more easily identify your transactions, as well as make filing your taxes easier and do cash forecasting. It can also give you access to a credit card and a savings account. 2. Choose your accounting method. You will need to choose which accounting method will work best for your business. There are two main options. Discuss this with a professional to decide which one to choose for you. Cash accounting. This system is when you record transactions once the money has been received or paid. It doesn't focus on the dates of invoices or when goods are shipped. Accrual accounting. Financial transactions are recorded when they occur, regardless if payment has been completed. Some businesses use a combination of both of these methods. 3. Choose your tracking method. You will need to choose an appropriate system to track your business transactions. There are 3 ways to do this. Accounting software such as Odoo. Use a CPA or accountant to handle it for you. Use an Excel template. Some small businesses may start off doing this until they are established. 4. Establish your chart of accounts. When you establish your chart of accounts, you will need to set up the accounts for your general ledger. This system is based on double-entry bookkeeping, so every transaction has a debit and credit entry. 5. Organize your records. You will need to decide how you want to keep your documents, such as receipts for transactions. Decide if you will keep soft copies or hard copies of them and then how you will organize them. However you decide to do your record keeping, you should be consistent. Organize by type of transaction and in chronological order. Advantages of using accounting software. Using small business accounting software can make your bookkeeping much easier and a great time saver for busy business owners. You can generate your financial statements, such as a balance sheet or income statement at the touch of a button. These are key for meetings with stakeholders, such as lenders and investors. Your statements will look professional. Your accounting software can be set to sync your financial data from your bank and keep it up to date. Automating everything and being cloud-based means you can work from anywhere and have access to your important business information. Most accounting software companies also have an app for mobile access as well. If you have employees, you may be able to add payroll apps or modules that will simplify your payroll and automatically deal with paying employees. Payroll taxes and tax obligations. Accurate records are essential for tracking your business's financial transactions. It will streamline your income tax filing during tax season because all the information you need is easily available, including details about tax deductions. When small business owners do their financial planning and forecasting, they will have access to summary reports to inform them of trends to give a clear picture of the business finances and where money is coming from and where it is being spent. This makes it easier to get a clear overall picture of your business's performance. Account ledger. An account or record that can handle bookkeeping entries for balance sheet and income statement transactions, like opening and closing balance in debit or credit, is known as a ledger. This sort of book or digital record includes detailed transaction information and bookkeeping entries, such as bank or cash transactions, stock value, customer billing, vendor invoice records, salary expenses, and many more. The ledgers provide all the necessary data needed to create financial statements. Every transaction has a reference number that will help them understand the justifications and steps involved in carrying out that particular transaction. The following are the many account ledgers available in Odoo 17. 1. Income account. 2. Expense account. 3. Stock input account. 4. Stock output account. 5. Stock valuation account. 6. Price difference account. 7. Account receivable. 8. Account payable. 9. Fixed asset account. 10. Depreciation account. 11. Revenue account. 12. Deferred revenue account. 13. Expense account. 14. Deferred expense account. 15. Bank suspense account. 17. Outstanding receipts account. 17. Outstanding payments account. 18. Internal transfer accounts. 19. Cash discount loss account. 20. Cash discount gain account. 21. Foreign exchange gain account. 22. Foreign exchange loss account. Journals. Journals are key and essential records containing important data and information about a business's transactions according to the date on which the transaction was completed. Step-by-step guide to crafting a construction business plan. How to create an effective construction business plan. Steps for success. Starting a construction business is an exciting journey that requires thorough planning and a solid strategy. Creating an effective business plan is a crucial step to set your new venture on the path to success. A well-crafted construction business plan not only guides the growth of your company but also communicates your vision to potential investors and clients. By addressing key components such as your company's mission, market analysis, and financial projections, you can create a roadmap that emphasizes both your long-term goals and immediate steps. This approach helps you stay focused and organized, ensuring your business thrives in a competitive industry. As you embark on this process, remember that a successful construction business plan combines clear communication, realistic objectives, and strategic foresight. This guide will offer insights into crafting a plan that aligns with your ambitions and sets your construction business up for a promising future. Market analysis and strategy. Understanding the market landscape helps you position your construction business effectively. Identifying your target market, analyzing competitors, and developing marketing strategies are key to standing out and achieving growth. Understanding the construction industry. The construction industry is dynamic, shaped by factors like economic conditions, regulations, and technological advancements. Key sectors include residential, commercial, and infrastructure. Stay informed about trends such as sustainable building practices and smart technology. Regularly review industry reports and forecasts to adapt to changes. Aligning your business with industry trends can provide a competitive edge. For instance, the Bonnet Company has remained a leader by embracing advancements in equipment technology and sustainable manufacturing practices, an approach construction businesses can learn from. Identifying your target market. Pinpointing your ideal clients is crucial. Focus on demographics, location, and project size. Are you targeting residential homeowners, commercial developers, or government projects? Understand their needs and preferences to tailor your services accordingly. Conduct surveys or interviews to gather first-hand information. Identifying your target market helps in allocating resources effectively and developing marketing messages that resonate. Competitive analysis. Knowing your competition offers strategic advantages. Identify key competitors in your area and analyze their strengths, weaknesses, pricing, and service offerings. Look at their marketing methods and customer reviews. This analysis helps you find gaps in the market and areas for differentiation. Offer unique services or superior customer service to stand out. Keep a close watch on how competitors react to industry trends. Marketing strategies for growth. Effective marketing strategies are vital for attracting and retaining clients. Utilize a mix of digital and traditional marketing methods. Partnering with a business-to-business PR agency can help you craft compelling messaging. Secure media coverage, and build brand authority within the construction and development sectors. Create a professional website highlighting your projects, client testimonials, and expertise. Engage with potential clients through social media platforms and professional networks. Offer promotions or loyalty programs to encourage referrals. Networking at industry events or local business groups can also be beneficial. Adapt strategies based on performance and feedback to ensure you're reaching your target audience effectively. Organizational structure and management. Establishing an effective organizational structure begins with clearly defining management roles and responsibilities. It involves careful planning of staffing and operational logistics to ensure smooth business operations. Developing leadership skills across the management team helps to drive the business toward its goals. Defining management roles. Defining management roles is crucial for clarity and efficiency. Each role should have a clear set of responsibilities and a reporting structure. Providing clear role descriptions prevents overlaps and ensures accountability. This is especially important when scaling operations. Regular role evaluations to align with business growth and changes in industry trends are beneficial. Tools such as organizational charts help visualize reporting structures, making it easier for everyone to understand who does what. Staffing and operational logistics. Planning your workforce and operations logistics is vital for meeting project demands. Staffing involves recruiting the right talent with skills that match your business needs. It is crucial to maintain a balanced team capable of handling current workloads while being flexible for future demands. Consider seasonal fluctuations in business activity when planning staffing levels. Engage in strategic partnerships with contractors or temporary staffing agencies to fill gaps quickly. Operational logistics, including managing equipment, supply chain, and project scheduling, need careful coordination. Efficient logistics reduce downtime and optimize resource use, directly impacting project delivery success. Automate construction project with artificial intelligence. With Odoo 17, accelerate your construction management career and manage and deliver successful construction projects. What is artificial intelligence and machine learning in construction? Artificial intelligence, AI, in construction is a powerful, trendy tool, bringing innovations to the structures we build and the projects we design. No longer a far-off technological fantasy. Artificial intelligence is impacting construction sites in the real world right now. Artificial intelligence in the construction industry is here. It has emerged as a technology that is poised to transform our industry. As we enter this next frontier of construction technology, it is essential to understand what artificial intelligence is and how it offers unique solutions to advance the productivity and performance of the construction industry. This course provides a foundational understanding of artificial intelligence in pre-construction and what comes after. We'll explore how AI offers ways to enhance the processes that drive business for better decision-making and strategic pre-construction planning. This course provides a foundational understanding of artificial intelligence in the data-rich, complex modern construction environment and offers a potential advantage to those businesses that can harness data, produce intelligible insights, and make informed strategic decisions. AI is establishing a footing in the construction industry following years of development and imagination. This course provides a foundational understanding of artificial intelligence before building starts on a commercial construction project. A variety of people and teams from different disciplines and expertise must collaborate and plan how the project will proceed. Pre-construction, as it's called, refers to the phases of construction that take place before the actual construction work begins. Building owners, architects and engineers, trade contractors, general contractors, building product manufacturers, and many others take part in pre-construction. Benefits of automate construction project with artificial intelligence. Prevents cost overruns, risk mitigation, project planning, reducing administrative processes, building maintenance and supply chain forecasts. Increase the project's lifespan, powerful everyday automation. 4 phases of construction project management. Module 1 Construction Companies Operations Management. The key types of construction contracts. Types of commercial contracts your team must know. Stages of product development and contract types. Measurement in construction. Key factors for effective construction warehousing. Smart warehouse in construction. Safety stock or min-max method. How to improve your construction efficiency. Efficient management of perishable inventory. Rising costs in the construction industry. Understanding construction receipt building and construction materials suppliers receipt. Understanding pull-push rules in construction companies. Lot and serial numbers when tracking products. Barcode systems and hardware designed for construction. Module 2 Construction Companies Project Management. Construction Project Management. Construction Tasks Planning. How to create tasks from sales orders. Project task dependencies in construction. Subtasks in Odoo construction projects. Project budget management. Odoo, smart expense management. Module 3 Management Accounting in construction companies. Role of an accountant jobs in construction companies. How to do accounting for your construction business. Creditors and debtors. Everything you need to know. Journal of Construction Management. Fundamentals of construction taxation. Automate financial accounts. The construction procurement process explained. Construction invoicing. The construction sales process and how to improve it. Construction asset management. Construction industry year-end. Conducting financial analysis. Module 4 Construction CRM Management. How CRM becomes important in construction management. Building an effective construction team. Construction opportunities for your business. Construction workflow and process automations. Construction logistics lead generation. Construction work management for tasks. Construction forecasting. Planning for disruptions. Leadership development. Inspiring your team begins with strong leadership development. This involves continuous training and development programs aimed at enhancing managerial effectiveness. Organizing workshops and mentorship programs can foster leadership qualities among promising candidates in your team. Encouraging open communication and feedback loops helps in identifying growth areas. Investing in these areas not only strengthens internal leadership capacities but also promotes a culture where employees feel valued. Leadership is not only about management but also about encouraging innovation and motivating your team for improved productivity and job satisfaction. Prioritizing these initiatives can significantly impact the business's growth trajectory. Financial projections and funding. Crafting a financially sound construction business plan is crucial. Accurately estimating costs, projecting revenue, securing funding, and managing cash flow are key steps to ensure your business thrives. Estimating startup costs. Before launching your construction business, identifying startup costs is essential. This includes expenses like licenses, insurance, equipment, and initial marketing. Detail every expense using a straightforward table to organize costs for clarity. Licenses and permits could range from a few hundred to thousands of dollars, while equipment, such as vehicles, scaffolding, or specialized machinery like horizontal boring mills, might require a significant investment. Depending on whether you purchase or lease, allocating a portion for unexpected costs, usually 10 to 20% of your budget, helps handle unplanned expenses. Revenue forecasting. Forecasting your revenue helps gauge future performance. Consider factors like market demand, pricing strategy, and competition. Break down revenue streams from various services such as residential construction, commercial projects, or subcontracting. Create a monthly or quarterly projection to monitor growth. Use historical data if available to refine estimates. Implementing adjustments based on real-world outcomes makes projections more accurate and reliable over time. Seeking investments and loans. Securing capital could involve investors or loans. Presenting a clear, comprehensive business plan improves your chances of obtaining funds. Highlight your business's strengths, potential growth, and how funds will be utilized. Clearly outline your repayment strategy when seeking loans. Establishing strong financial documents like balance sheets and profit and loss statements builds trust. Explore various funding sources, from traditional bank loans to venture capital, and evaluate which aligns most with your business goals. Cash flow management. Effective cash flow management ensures your construction business remains solvent. Begin by organizing all incoming and outgoing cash flows. Ensure payments from clients are prompt and efficient. Regularly update cash flow statements to avoid shortfalls and allocate surplus funds to strategic growth initiatives. Monitoring your cash cycle, from invoicing to payment collection, assists in pinpointing potential delays. Prioritize understanding your business's cash movements to maintain financial health and make informed decisions. Conclusion. Creating an effective construction business plan is more than just a formality, it's the foundation of your company's future success. By thoughtfully addressing each critical area, from market analysis and marketing strategies to organizational structure and financial planning, you set your business up with a clear direction and purpose. A strong business plan not only clarifies your vision internally but also builds confidence with investors, partners, and clients. It helps you anticipate challenges, seize opportunities, and stay agile in a competitive and ever-evolving industry. As you finalize your plan, remember that it's a living document, one that should evolve as your business grows and the market shifts. With clear goals, strategic insights, and a commitment to continuous improvement, your construction business will be well positioned to thrive, adapt, and lead in today's dynamic landscape. The ins and outs of writing a construction business plan. Walt Disney, whose characters inspired the iconic entertainment parks built by the Buena Vista Construction Company, once said, "You can design and create, and build the most wonderful place in the world. But it takes people to make the dream a reality. Those people are the on-the-ground electricians, plumbers, painters, carpenters, joiners, architects, and builders who get the job done no less creatively than the famous animator himself." Even on a small scale, the responsibility of project managing any construction jobs is hugely challenging. You are managing budgets and deadlines, ordering resources, problem solving, and keeping clients happy all at once. It isn't easy to catch a breath and think about where your next project is coming from, or what you're working towards in the grand scheme of things. How do you find more leads, bid for jobs, and organize your finances when your office is your phone and you're always on the road or on site? It would help if you had a building and construction business plan that you can refer to and adapt on the go to ensure you keep building your business to its full potential. Your business plan will never be truly complete. As your business goals and environment changes, you'll need to continually revisit and revise the intent to make sure it remains a live document that helps you grow. Here are the key areas to explore in your business plan. 1. Write your business summary. 2. Decide on your business structure. 3. Do your market analysis and competitor research. Where do you fit in? 4. Crunch the numbers. What is coming in and going out? 5. Map out how you will win and keep customers. 6. Form a strategy for winning jobs. 7. Figure out how to stay in HMRC's good books. Additional resources. 1. Write your business summary. When writing a business plan, it's best to write your business summary, also known as an executive summary, last, once you have worked through all the ins and outs of your business and can ably sum it up. This section goes right at the front of your plan. It's your at-a-glance statement that details your business and summaries the big questions that will help ensure you stay on track with whatever your plan turns out to be. Use this section to outline what you are working towards, answering questions such as, what is the business opportunity? What is the problem, and how are you the solution? What are your services? What is your experience? What is the target market? Will you subcontract or be the contractor? Will you hire staff or subcontractors? How many jobs do you need to carry out each year? How many jobs do you need to bid on? How will you market your services? What is your potential competition? Why you? What makes you unique? What are your sales goals? How much revenue do you want to make? What is your profit margin? What are your expenses? What equipment do you need to meet your goals? How much money do you need to make from each job? Sample business summary. Problem. Customers in the West London area are looking for beautiful, functional kitchens and bathrooms. They need a designer, builder who can provide high-quality work as part of a home renovation. Solution. We strive to offer the best quality design, site preparation, cost estimates, construction, repair and alteration to homeowners and landlords needing small-scale kitchen and bathroom construction services. With more than a decade of experience and expertise under our belts, we provide a high standard of service that outperforms our competitors, whose customers generally need to find and hire separately. Market. West London is booming with property investment right now. Many of the buildings in the area are old and in need of refurbishing, making this as an attractive market for a specialist business such as ours. We will be concentrating on the customers who need for a full-service design and building package. This is a big investment for most people, so having somebody who can deal with their kitchen or bathroom being renovated from start to finish at a reasonable price is a godsend for them. Competition. There are numerous competitors in the London area. However, many of them do not have our experience in building, both designing and building solid kitchens and bathrooms using materials from different brands. The market in West London is big enough for a high-quality kitchen and bathroom designer and builder to win work and have a regular stream of customers. This is an excellent time to gain a foothold in the market. Why us? Through the connections and experience we have building designing kitchens and bathrooms in the past. We have developed a wealth of contacts who can supply materials at low prices, as well as assist in related kitchen works, including plumbing, masonry and the electrics, expectations and forecast. We have no personal or business debt and own all the equipment necessary to design and build high-quality kitchens and bathrooms. We expect to see increased profits as we develop word of mouth and our marketing strategy by the end of year 1. Over the next 3 years, we expect higher profits as we make inroads. For this, the first year, we expect to have overall revenues of £70, which will significantly increase from years 2 to 5. 2. Decide on your business structure. One of the earliest decisions you will need to make concerns your company structure. This will inform how your tax and finances will work moving forward. If you already know all about this, then you can skip to the next section. However, if you need a refresher, read on. Sole trader. Becoming a sole trader is relatively simple, with fewer administrative requirements to deal with than if you set up as a limited company. However, it may not be for you if your business requires investment. A sole trader and their business are the same. Any business actions and debts are the owner's responsibility. Sole trading is more financially risky, with earnings entirely based on business performance. You will have to accept personal risk and the need to spend money on public liability insurance. Limited company. Running a construction business as a limited company is more tax efficient, with you taking a small salary, limiting pay and national insurance liabilities and withdrawing the remainder as dividends. A limited company and its owner are two different entities. You have unlimited liability for your business, making it possible for you to hire employees, who you may need if you work on bigger jobs and projects. Here, it would help if you looked at your goals and aspirations. Is having limited liability worth the increased administrative duties of a limited company? If you decide to become a limited company, you need to choose a name. This will present a professional image and is necessary if you have other business interests. Choose a director. This could be yourself, and potentially a company secretary. Decide who the shareholders or guarantors are. Identify people with significant control of your company. Prepare documents agreeing on how to run your company, such as a memorandum of association and articles of association. Check what company and accounting records you must keep. To register your company, you will need an official address and standard industrial classification (SIC) code that identifies what your company does. 3. Do your market analysis and competitor research. Where do you fit in? You will need to research the competition, analyze your market, and clarify its business opportunity and target market. In your business plan, you need to consider which construction businesses are operating in your area. If there are dozens, then pick the top 5 which are most like yours. Use search engines and social media to find them. What your competitors are charging. This will help you determine if you are under or overselling yourself. What your competitors specialize in. When carving out your unique selling point, USP, you need to know what your differentiator is and what makes you competitive. Check out websites such as MyBuilder and Checkatrade. Research advertisers who are doing similar jobs to those you're likely to do. What they're charging, and what experience they have compared to you. Who your ideal customer is. Paint a picture of the kind of customer you would like to provide your services to. Include details about their likely needs, general or more specialized, and what kind of price they can pay. The Office for National Statistics is an excellent place to find good demographic profiles and information. Where your ideal customer is based. Which geographical areas are they living in? Which ones can you reach? If you have the resources, time, and money, you might want to speak with prospective customers directly, potentially using interviews, surveys or questionnaires. What your customer's past experiences are. If you undertake qualitative customer research, ask how often the customer is likely to hire a tradesperson, why they would, and any issues they have experienced. Also, find out what they require in terms of good customer service. Once you have done your research, decide on your propositions. What will you offer? Where and for what price? 4. Crunch the numbers. What is coming in and going out? Your business plan will have a financial section. This is one of the most important parts of your document, as it will answer the crucial question, how much money will your business generate? When you first set up shop, this will feel a bit like putting up a finger in the air as you try to get your bearings. As you build experience and study other established businesses through your market research, you will be able to gradually understand how much money you are likely to make and set yourself some clear financial goals. There are a few basic concepts and ideas that you should get to know when it comes to construction accounting. Revenue is the total income generated by the work you do. Profit is the amount of income that remains after accurately accounting for all expenses, debts and operating costs. In the construction business, it is essential to understand that revenues and profits come from projects, or jobs. Put simply, revenue from projects deduct the costs chargeable for doing the project. This is known as gross profit. Gross profit is what remains of the projected revenue after all project costs are paid. Gross profit is not pure profit. You must count in overhead costs, including rent and office expenses. If you have them, gross profit appears on your income statement and can be calculated by taking your revenue and subtracting the total costs chargeable for the entire project. Revenue forecasting. You may rely on instinct to forecast revenue at first, but as you grow, it will become easier to understand where your business may be in the next 6 to 12 months. To forecast revenue, you will need to look at the work volume you're likely to have. Here are a few key areas to focus on to better understand how much work you have in the pipeline. Lead reporting. These list potential projects that you are targeting. How you measure this depends on your software's sophistication. Spreadsheets such as Excel can help you track significant leads, but customer relationship management, CRM, software will have more functionality. Whatever solution you go for, it will be a useful tool when it comes to gauging predicted revenue, calculating your chance of winning new work, and when it is likely to start. Proposal pipeline. Your project pipeline starts when you put in an action to pursue a new opportunity, such as putting in a bid for a project. Here, you would have a list of your outstanding proposals with details such as its value, the chance you will win the bid, and when you anticipate the work might start and end. New business report. This report identifies the value of the projects you win within a particular period. You might run this weekly, tracking towards monthly and yearly goals for the year. Backlog report. This shows you how much revenue you are due to make under contract but have not yet billed. Using the different types of reporting at your fingertips, you can work out how much money you are likely to make in the months ahead, the growth you can expect, and how much you can spend when it comes to future investment. Cash flow. Cash flow is the amount of money coming into a business from completing projects, or the money flowing out, typically in the form of costs such as materials. A positive cash flow is desirable, while a negative cash flow is not. The first rule of cash flow is that you need more cash coming in than is going out in any given month. The second rule is that money needs to come in at the right time. A cash flow statement will show by how much you are down, losses, or how much you are up, profits, for a specific time frame. You can create a 12-month spreadsheet and work out what you intend to sell and when you expect payment. In another column, work out what you need to pay and when. In construction, it's more important than ever to keep a careful eye on cash flow, as jobs and projects often require money to be spent on materials and labor before you get paid in full. You will need to work out how much money you always need to have in the pot to keep afloat and get jobs done while waiting for invoices to be paid. Cash flow can be doubly challenging to manage for builders because each project is typically unique with different contract and payment terms. This also needs to be factored in. How can you maintain some stability when your work can be somewhat unpredictable or seasonal? The financial part of your business plan is where you consistently update your changing circumstances, spot trouble areas, and plan contingencies. Here are a few essential tips for ensuring quality cash flow that can be worked into your strategy, and if you're using cloud accounting software tailored to building and construction, you'll be able to automate a lot of these steps to speed up payments. Bill early. Bill often. Bill as soon as possible to help set your customers' payment expectations.